taking a look at some of the restaurant names, and this is an ETF, the EATS ETF for restaurants. I'm not a fan of it as an investment or a trade because it's really low volume, and I'd prefer to go with the individual names. But just a quick look at it, and in fact, you have to use a line chart because you can see the volume is just so sparse. But it's difficult to pick up a trend with candles. But looking at a line graph, we can kind of see the trend for the names that are within this ETF, and this is steady uptrend from the bottom of a base. We can take a proportional measure of the bottom of the base to the supporting level. Sometimes you can take it to the top of the base where we exit, but this is kind of a conservative way to project it. And then you take the clone of that proportional measure and add it to the top of the base, and that is your first kind of rough estimate of potential for the upper end of a move, and you can see we're about 7% away from that. This looks like maybe wave 3 of a 5-wave movement, in which case you might get all the way up here and then start to retrace into a supporting area. It could start to retrace into a supporting area now, and then a wave 5 up would take us to the top of that range. But that remains to be seen. So better bet is for us to take a look at now that we're comfortable with the trend in the path of what appears to be a representation of the sector. We'll take a look at some of the individual names, and here we've got Starbucks, Chipotle, Wing House, Texas Roadhouse, Brinkster's Eats, the EAT symbol. So we've got those added together to make just a makeshift index. These, the downside of this is Wing is a pretty expensive stock, so it's going to skew it a little bit because it's not an equal weighting. But so you've got all of the collection of all of these forming a trend. It's really very, very similar to what we see with the ETF. So you've got a basing pattern that bottoms in the middle of 2022. In this case, I like the proportional measure from to the top of the breakout of the base, and then placing the measured range at the top of that. And you can see that right at that measured range, that's where we've had a lot of our touch points in the upper half of this rectangular consolidation. Rectangles are powerful formations in technical analysis. So you've got price a battle between buyers and sellers within this rectangle, and you can see that a lot of the activity is taking place in the upper half of it, which tells us that buyers are showing more interest than sellers. And once we break above this, we're probably going to see a measured range from proportional movement from at least the middle, the upper 25% of this consolidation area to a move that's at least equal to the height of the rectangle. And normally, you would take it and you would forecast an expectation that we have a proportional move equal to the height of the rectangle. So that's just a conservative view, and adding it on to the prior range. And the reason that I would do that is because it's going to represent a fifth wave, and we would expect normally the third wave is the longest, and but in occasion the first or fifth wave can be longer than the third. The third wave cannot be the shortest. It's the only really firm rule that I try to stick to with LA wave structures. So taking a look at some individual names, Starbucks has really been beaten down. It's exhausted a lot of buyers and sellers in recent years, and it's tempting to think that we've already seen the move, we've missed it, right? But a lot of times, a name like this has exhausted so many buyers and sellers. We don't have any anchored VWAPs that it's sitting below. So you take an anchored volume weighted average from a prior high, and it's above all of those. So the average buyer is in profit, and that tells us that it's got room to behave as if it's in price discovery and continue moving higher. So we've broken above the 786 from the prior retrace, and we're taking that from momentum crossover in May 2023 to the low in July 2024. And the once we cross this 0.786, it's got a higher likelihood to run up to the 1.272. So I'm looking for it to make a move to that level, probably come back and come down, as low as, like, say, 103, 105. If it goes below this level, we've invalidated the hypothesis for a 5-wave upward movement. So we're looking for it to support at least at this 105 level, 103, 105, and then it would likely then make its final move up, potentially challenging the 1.618 and a new high. That's typical behavior in a bull market. We see things that have been beaten down, show us a recovery, and then they go on to make a new all-time high, even if it's a modest new high, at least challenge the prior high. So I'm looking to participate in this one, and again, the stop I exit if it fell below this 105 level, giving myself a healthy buffer by using the stop level that I would prefer, plus a portion of an average true range. In this case, I'm going to take half of it, so about like $1.15 below that level, so that I hopefully don't get whipsawed out of a stop. And that's how I choose to play. Not financial advice, just what I'm going to do to manage this position. Wingstop is an interesting opportunity. This is really in like the early stage of a recovery, so this is likely a 3-up. It'll probably pan out in hindsight later on to have been the entirety of a first wave movement, but the first wave of a recovery can retrace like nearly 100%. So I'm thinking that this is going to, so we ran into resistance. I should not hear that, but so we ran into resistance at the anchored volume weighted average from the gap down in October of 24. That's a normal area for resistance, and it's reversing. It's probably going to come down and find support. It should not go below 289. It'll probably come in and find support, around this AVWAP from the high in December. So probably 293, 294 might be an area that it tests, could dip a little bit below it, and then it should break through this AVWAP from the gap down, and then make a move towards the one from the high in September of 24. And that takes us almost to the 0.382. So in a trend, it's normal for price to revisit the 382 and can stay in a continuation of that trend. That means that if it finds resistance here, we could still be in a longer term downtrend with Wing, and that's why we want to be careful with this. So I would look at this as an opportunity for a short-term trade, and then I would continue, me personally, and then I'll continue to watch it and see if it develops into a longer-term recovery. If it does, we should see a base, and it'll exhaust these overhead AVWAPs. It'll fight through gap closures, and I like these targets ahead that were confluence zones between GAN levels and other Fibonacci analysis. I'm going to look at one more name, Chipotle. Is one that I've been in for a long time, and had a lot of luck trading in and out of it. It's got a very clear long-term wave structure. It is an incomplete fifth wave up in the structure. So that's bearish. But once we get through this AVWAP from the most recent high in December, we should get up above it, take a little test of it, and then hopefully I'm thinking that this fifth wave might exhaust, and maybe it gets up to 72.34, maybe it doesn't, and it just matches the prior all-time high. That could be expected as this name's kind of fallen out of favor in recent years. You can see that it's had some really proportional moves, right? You've got kind of a sub-wave, fifth wave move up. It's technically violated by price coming down in October below the August high. So you've got this little uptrend pullback within the long-term structure, and it did hit some measured proportional ranges. and now we've got a squeeze in between VWAPs from lows, prior all-time high, recent high. That tells us we've got a little bit of a volatility squeeze. Whichever way that it breaks is going to be its strongest move. So a break below 57 probably takes us down to like between 50 and 52. So just to be aware of that. And maybe we'll take a look at one more. We'll take a look at Texas Roadhouse. This is a strong name. It's done very well. I don't have any drawings on it, so this will be fun. We've got a gap. Gap up in February of 2024. Let's add we'll add an anchored VWAP to that. And we'll add one to the high. This is possibly early into a three-wave correction, so we need to be aware of that. Looks again really similar to this aggregated trend of all of the restaurants, and it's not a large dollar amount. It's like 200, right? So it's larger than Starbucks, and it's larger than Chipotle, smaller than Wing House. So it's not overly skewing the trend of the aggregated model. But so we've got what looks like this is possibly a fifth wave up. So if we think this is wave 2, then this is normal for wave 3 to have a couple of attempts. Wave 4s really like to aggregate around prior price levels or prior price actions. So and then we've got a shorter impulse wave up for 5. That implies this could be an ABC down, or we could see like a running flat. The location of this green AVWAP suggests to me that it's probably going to be a running flat, and running flats will have like a C that is a little bit higher than A, and that's bullish. So if we see that, then we're looking at a scenario where we have an opportunity for continuation, taking our Fibonacci retrace from the momentum crossover. Extend that out a little bit, and this is getting a little bit small to see, and the video is getting a little bit long. So let's take a look there. So if it holds support here, so bounced off of this, expected resistance at the AVWAP from the all-time high. It's possible that we come down and hit this AVWAP from the gap. It looks like that's where it's trending. And let's see what the Fibonacci level would tell us. We'll take this from this momentum crossover shortly after the bottom of wave 2. Let's see if that's a meaningful candle. So using volume weighted, the volume candles are a little bit wider. They help you to understand if you've anchored to something that's meaningful to the trend. If there's been a lot of activity in line with it. I kind of prefer it from where the ADX crosses over. Just given that these aren't terribly strong candles, but this is roughly where sentiment started to change its pace and move into this wave 3 uptrend. So it's a little bit nuanced. And so then when we look at the fib anchored that way, the 382 is at about 173, right in line with where this anchored VWAP from the gap is trending. I wouldn't be surprised to see this come back down and kind of maybe put in a lower low before, a lower low after the January 13th low, and then begin its recovery and move higher, and that would be a great opportunity. So I'm a fan of this name. I've never had an opportunity to get into it, but this looks like it might be it. Let's try a Gann timeline. So we've got that confirmed lower high, higher low. So with this confirmed higher low, June 2022, we'll take the GAN level. So configured the Fibonacci time zones with the square of 9 formula and ranges, and so we'll lock this one, clone it. Cloned GAN 2, clone it with the cloned GAN 1, and we should see a timeline that lines up with pivot points. It looks like it's pretty close. Pretty close. It looks like it lines up more cleanly later into the trend, but I'm going to take a look at moving it to another location just to see if there's a more accurate approach that the market respects. And we've got this 2-bar reversal with an outside candle here. Like, this is a nice reversal area right here. So let's give that a try. The goal here is to identify, where the market has confirmed that it's changed direction to move off of a low and to begin its uptrend, and then we look at our timeline to see where it lines up with sentiment after that. And this one's that's a much better timeline in line with anticipation of where the mood of the market shifts. Still not perfect, but it bears revisiting. So I would say that we probably see this downtrend play out and retest consolidation between an AV web from a prior low with the gap up and the all-time high. We'll probably see that play out through a squeeze right here and come to a conclusion sometime in the first part of March, and then we should see the continuation of an uptrend, provided the market's still in favor of this name. That should start to take place around the May timeframe. This August timeframe aligns to a typical seasonal low, so that if we're talking about a scenario for a recovery and a new uptrend, it might look something like this, right? Like we've got 1, 2, 3 into the 100% level of that retrace. Retest the top of your wave 1 on the seasonal period in August, maybe September timeframe, and then move to either the 1.272 or even that would be like an extended play. So probably see something like this into the fall time period, maybe a correction after that, and then a challenge for a new all-time high. And that's how you wind up in trends with those basing patterns, those classic basing patterns, or also like inverted head and shoulders is what this would start to look like as well, and those forecasts for a higher movement too. So that's just how we would anticipate the potential shift in the psychology of the market. That's it for now in restaurants, but I think this is a space that deserves a little attention. Looks like it's seeing bounces and recoveries in some names, and then opportunities that are lagging that should play out later on. So good mix.